Matt, how are you, my man?
Very good, David. Thanks for having me on. Appreciate it.
Well, thank you for joining me. This is actually a this is going to be a really great episode because I really enjoy the topic that you're going to bring today, which is about retirement planning and how advanced it can be. Because a lot of people believe it to just be a 401k, which we'll get in here today. So tell us about yourself, man. Where you, company, where you're from, and how you got into this space.
My company is Life Inc. Retirement Services. Been around for over 10 years now. Um, it's a collective of just a bunch of 401k experts in one business, and we build custom plans for high income entrepreneurs. I've been in the business, I guess finance, I should say, for over 20 years now. Started off doing the more B2B, B2C stuff, focusing on individuals. I was in Florida at the time. And I veered my career into, instead of being just a general practitioner, in the financial advisor side, I'm more of a specialist now. I want to be a specialist and work with only entrepreneurs, business owners, real estate investors. It's a more every day is different. Every single person I talk to is different. I can pick their brain on how they've grown and where they're at. It's just a lot more fun.
Let's dive right into that. What in the
Yeah.
world is a custom plan?
Good question. Good question. So there's a big misconception out there that all 401ks are created equal, right? So 401k is a 401k is a 401k. You're plugging your 23.5 into it. You're buying some boring mutual fund, and that's about it. And you're going to save that till you're 59 and a half. And the reality is it's a much more vast world, and there's a lot more gray area.
When you say gray area, you mean is it because it's like loosely interpreted or could be interpreted differently? Is that what you mean?
Everything comes down to your plan document, your adoption agreement. And there's basically two kinds, right? There's prototype and non-prototype. Prototype is boilerplate. It's like you're going to LegalZoom, downloading your whatever legal document you need and filling in your name, and there you have a plan. Versus custom is like going to the attorney, creating the document based on your business, your goals, whatever function you want it to have, and it's yours. And it's filed every single time with the new client. And that's what we do.
So kind of like ETF versus direct stock. Is that kind of like the
Yeah.
concept? Like,
I
yeah,
I
like
think that's a
you,
perfect analysis.
yeah. So what you're saying is that most 401ks are set up to the point where there's no control, no flexibility. Somebody else is smarter than you, apparently. Let's put quotes on that, right? And they know how to manage your money better than you'll ever know how to do, because that's kind of the mantra of most of these firms. Like, we're good at
Yep.
this. And so you're saying the opposite to that is what you guys do, which is giving people back control.
100%. 100%. That's exactly right.
That's so good. Concept. Just throwing this out there is, I wrote a book called Building Your Own Economy, and that concept is like the core thesis of the book, taking back control. And this ties right into it. So how does somebody take back control of their 401k?
Well, these big companies, they do these these prototype plan designs, right? And it's more like they want to keep control of their protocol. They want their staff to not have to think too far outside the box. And then we're doing the exact opposite of that, basically. And 401k, profit sharing, defined benefit, all this, it's a code. It's a tax code, right?
Yes.
And building around that, that's just step one. Step two is, what do you want to invest in? And every single time we have a conversation, there's three questions at the top. First thing we do, number one, who's this for? Is it you, or is it your employees, or is it both? And then two, how much do you want to put towards this? Is it 20 grand, 50? Is it a million? Is it $3 million? Whatever you want. And then number three is, how do you want to invest that money? And do you want to do boring, mutual funds, ETFs, stock, bonds, cryptocurrency, syndicates, EFTs,
Interesting.
do you want to be a
Could,
private lender inside your own plan? You can do all that. 401k is just the umbrella. It's what do you want to do with it inside that?
do, does when you're setting these up, does the because basically, just so everybody's on the same page, we're talking about a business owner who wants to establish a 401k inside of their company, and they reach out to you and they say, hey, like, I've talked to some other people and they're not letting me, they're not allowing me to decide where these funds would be invested. They're just saying, this is the plan, this is the way, go for it or don't do it, whatever. And you're saying there is a way. Now, the next question as a business owner, I would ask you is, do we get to pick the investment, and it could be any investment, or it has to be a portfolio that you guys have already access to?
No, it could be any investment. There's three roles to every plan, right? There's the administrator, like who's creating that document, right? Who's creating that legal document for
That's
it,
you.
and that's us. We design it. Number two is the investment fiduciary, if you will, and that's generally like for the most part, it's a financial advisor who's giving you a menu of mutual funds with target date
I
funds at
get
the
it.
top and whatever you want. And then the third is the custodian or the where's that money being held? And if you want to self-direct, you're your own fiduciary. You're great. You pick your own investments, and then we just find how do we get that invested. So, for example, if you want to do real estate, if you want to do any of that, all you have to do is open up a bank account in the name of your 401k plan. A 401k is a trust.
Yep.
All we're doing is you're opening up a trust account, and all the money flows in and out of that. And there's certain things you can't do, like art, right? But basically, there's a lot of stuff you can do with it. There's a lot of stuff you can do inside of there, and it's considered a self-directed 401k.
What if there's employees involved in this? Is there more? Is that does that change the narrative there? What you're saying?
It does a little bit. A lot of times, you're protecting your employees from themselves. For a lot of times. So basically what you do is you create that menu for whoever wants to have that option, right? That menu of funds. And then you get the opportunity to opt out. Opt out of liability is a big piece of that, right? Like you are giving them free reign to do whatever they want. And then you can sweep it over to like a brokerage account or whatever they want to do if they want to get into individual stocks and things like that. So it's all about when you have employees, it's liability, because you as the business owner, even if you outsource and hire these specialists like us to everybody, there's always a level of liability for the business owner. Always, always, always. So you just need to make sure you track that. But it's all about, I say this all the time, 401k is for the business owner. It is a IRS code built for the business owner. You just got to check off the box saying I've created this fair plan for my employees, and then you can do whatever you want. They don't care about the owner. They care about the employees. And as long as you take care of them, you're golden. At the end of the day, whatever you offer to yourself, you have to offer to your employees. You have to give them the option to opt in or opt out of that,
Same
whatever you want
terms
to
is
do.
what you're saying. Same terms, like price per share is what you're saying.
Exactly. So they can buy pieces of your own company. Absolutely.
So for an example, if my entity was structured as a C corp currently, and I was going to establish an initial 401k plan, and I wanted to offer that to the and I was using you, and I said I'm going to give them the option to invest in the company just like I would. I could do that.
Yeah. It's
That's
called a
pretty
Rob's
interesting.
401k. Yeah. Yep.
That's really interesting because I think I mean obviously they have to have also, let's say that was one option, but the other option is obviously they do it themselves, right? Somewhere else, go something, do something with it, correct?
Yes. Yep.
They have to
Yeah.
have that option.
Yeah. The tax code, all 7,000 pages or whatever it is built for entrepreneurs. I'm talking about one tax code, right? Like there's a lot of other tax codes that need to be paired in with the 401k. If all you're doing is working with me and this is your absolute number one, tax strategy, there needs to be more to it. Everything's built for the
Definitely.
entrepreneur.
What's the name of the tax credit you're referring to when they get the tax credits for like 30 grand?
Yeah. So the tax credit is under Secure 2.0. Okay. And it expanded under Secure 2.0. So that was what, 2023, I think was the first year they did Secure 2.0. So there's 3 tax credits inside of that one. One is called the administration credit or the record keep, where it offsets your out-of-pocket costs. You're going to get $250 per employee, basically. I won't go too far down what that means exactly,
Just
but
high level.
$250 per person on that. Then you're going to get another $500. This is funny. You're going to get $500 just to have an opt-out plan instead of an opt-in plan. However, they made that mandatory in 2025. So they're making you do it, but they're giving you a tax credit. That's 2. And 3, this is the big one. It's a contribution credit. Okay. For every employee that makes under $100,000 in your company, you get $1,000 tax credit to offset the match that you're giving them.
And we're talking about real credits, not deductions, correct?
100% credit. Credit.
Wow.
Form
And
8881.
and this could be for any entity. It doesn't have to be just a C corp. It could be an S corp. It could just be a general partnership, as long as they have employees and have an administrative plan set up.
You could mow grass and then just do a Schedule C, and you have a few employees that are W-2 on top of it. You get it. Absolutely.
Interesting. It's just to be clear, so everybody picks this up. There's two benefits. Well, there's two sides to this. So it just depends on the goal of the taxpayer and the individual who's contributing. But there are a lot of funds out there and a lot of syndications who are encouraging people to move, maybe a former retirement account or some sort of IRA. They're asking them, hey, why don't you just park it with this new investment, which is either, a syndication of sorts, which is in real estate. And there's two ways to see it. A lot of syndications and or fund managers and syndicators, they are very savvy when it comes to taxes now because everybody's becoming more aware, but they sell it on, hey, you should do this. It's got tax benefits, which they are not lying. So they're not lying. However, they're not telling the full story. So what they say is, but you should consult with your tax professional to make sure how this applies to you. But the real truth of the matter is, by investing in a fund, there are no immediate tax benefits to the buyer, like the investor. There's none. There's no immediate tax benefits because they're going to have losses they're going to carry to them, but those losses go to their retirement account. It doesn't pass through to the individual because you can't touch that money until retirement age. And if you did, you'd be penalized. So they can't even touch it. The only benefit to the investor is that they're projecting that the investment will outperform where they currently have their money. It's the only benefit. They're like, well, I believe in real estate so much more than I believe in the market, so I'm going to put my money in this deal. I can't touch it. I can't benefit from the tax savings. I can't do anything else with it. But I believe in this deal so much that it will outperform where I have my money now. It's the only benefit to me. And that's a hard sale, man.
Most of the self-directed clients that are doing real estate and syndicates or whatever, or just direct buying duplexes down the road, it's they already had all the money sitting in their 401k and it's all pre-tax, and you can do some Roth conversions in there, and we have a very white glove version of all that, but it's in reality the tax benefits are outside the plan because you're turning all these tax depreciation, and then all of a sudden now you have to pay income tax at the very end when you start pulling your money out with your RMDs.
Yeah. So this would be for a business owner who sees the value in chunking away money, wants to maximize the tax savings from not paying tax on that right now, deferring it, taking it into their own custody at some level with your help, right? By identifying what kind of asset classes they want to put it into, and then giving that option to their team if they have a team, and really just maximizing the tax code to their advantage, utilizing their own money, which they would have lost somewhere else anyways, right?
Exactly. Yeah. It's a lot of times people say I'm going to give it to my employees instead of the IRS. That's basically what if they're out, but that means their planning isn't 100% tightened up either, right?
But I mean, I'm a big advocate of teams and developing teams. Like that's kind of my deal. I mean, that's what I do every day as a business owner. I mean, I've got 65 employees and I manage them every day, and that in itself, like I think about myself as a steward and has to take care of the people, right? I have to take care of my people. And if I could find ways to do it, this is one of them. I'm going to do it. It's not even about me. I don't pay taxes. I mean,
yeah, I've heard you say that many times. It's tax code's built for the owners, for business owners, entrepreneurs. It's 100% true. And this is one tax code out of all the 7,000 pages.
That is, it's actually pretty impressive for you to share this, because I didn't know about these tax credits. I was not aware of them, and it's because we don't do a lot of work in this space, and so this is great information to help me and really expose me. I'd love to introduce you to some clients. So, and obviously, if we're here today and you're watching this, you got to reach out to Matt. Matt, how can somebody get a hold of you?
Yeah, our team is ready to talk to whoever has questions. It's 401k.expert is the website. Just go to 401k.expert. We just have conversations with people. We're not selling anyone. We're just saying, here's your deadline. This is what you can do. This is what you probably should do. And sometimes we say, I'll talk to you in 2 years when you're ready. Or we'll add one layer on top of the first one, second, and so on forth. So we're just trying to educate people because there's a lot of bad information out there. 401k.expert is a good first start for everybody.
Matt, this has been an awesome information. This has really helped me a lot personally from just learning so much from you. I'm excited. We got to have you on again once we get some of these set up for some of our clients, even for maybe our company. I like the idea. So
appreciate it.